Hey all, welcome to ShareTrack. This is Raj here. Friends, I've already expressed my opinion about the QQQ during the weekend analysis video. In that video, I also spoke about the trend of the stock prices of our genomics watch list, as well as the index movers, those four big tech companies that we look at. So you can always check that out. Today, I want to talk to you about Beam Therapeutics. I want to take a closer look at their ownership structure and a few other aspects and what it implies to the retail shareholder. I hope you find this interesting. That said, I would request our regular viewers to subscribe. As per YouTube stats, I'm still seeing that 60% of viewers have not subscribed. It's much better from the 65% before, so 5% of you have heeded to my request. Can you please help the channel and subscribe? You're watching the video, so obviously you like something that you see. You just subscribing is not going to cost you anything, but it's going to help the channel a lot. Thanks a lot. With that said, let's get started. Welcome back, friends. The first good thing about Beam Therapeutics is that it's a debt-free company and their equity is worth US $715 million at this point of time. This means they have borrowing power if needed. A debt equity ratio of 1:1 will give them plenty of additional equity if they wanted, without damaging their fundamentals, and that would provide better leverage for shareholders when the income starts coming in. Not right now, but when the income starts coming in. The logic is that the financial leverage will be better if you have fixed interest to pay for the capital, so that when the profits are higher, the share of the interest on the capital is much lesser, and the rest of the money is available for shareholder dividends. That way the shareholder value goes up significantly, and 1:1 debt equity ratio is a very, very reasonable expectation. And right now, I think our Beam Therapeutics is in a very good position. Their debt equity ratio is very healthy. So that's one observation I wanted to make. On February 2nd, 2023, we got news that BlackRock filed for a form called 13G/A with the SEC disclosing an increase in their shares of Beam from 4.06 million shares to 5.42 million shares. In percentage terms, their holdings go up from 6% of Beam shareholdings to 7.8% approximately. Let me show you a bunch of tables. Let us check out this table first to see the ownership of the top 25 shareholders. As you can see in this particular chart, we have big companies out here. The first one is ARK Investment. It holds around 11.93% of Beam. The next one is the Vanguard Group. The third one is ARK Venture Partners, and then we have BlackRock, and then Farallon Capital Management. Between the five of these top five companies, they hold 42.47% of Beam. So that's a big percent. And in terms of number of shares, they hold around 29 million shares out here. And then if you look at the ownership of the next five big holders, it is Temasek Holdings Private Limited with 4.16, State Street Global Advisors with 3.72, FMR LLC with 3.56, and MWG Management Limited with 3.41, and Impressa Management Limited with 3.10. So if you take the first top 10 share owners, they own around 60.42%. So that's a significant chunk of holding with a very relatively much smaller number of shareholders. And next, I want to show you this shareholding pattern. If you look at the shareholding pattern, one of the things you should note is that retail investors, which is the general public, have only 10% holdings. And institutions, including those whom I showed you as the top holders, they hold around 74.5% of the shares. And insiders are holding around 1.7%. And I believe insiders will always be the ones which will sell as and when the share price goes up, because part of the insider holding is also their remuneration, so they need to sell it. It's not like they think the company is bad or anything. And then, of course, we have the hedge funds and the venture capital and private equity firms. They are holding 5.3% and 8.5% respectively. So that's something that we have to keep in mind. The the distribution of the ownership. And the point to note is that the general public only owns 10% of the stake in the company. And right now, the total market capital for the company, based on the last closing share price, is $3.41 billion. One thing I would like to highlight here is the ownership dynamics that we as small shareholders should not lose sight of. And that, I think, is a big risk for our retail investors. And that is, while institutional investors have deep pockets and have talented analysts, and due to the favorable opinion of these analysts of the Beam stock, the institutions have bought into the shares. At present, they hold 75% of the stocks. When big investors hold large chunks of shares, the market is swayed by their actions both positively and negatively. Sometimes their priorities change and they unload shares. We have seen Cathie Woods do that many times in the last year. So if any of the big holders decide to sell for the next best opportunity, it can hit the share prices badly, cause a bad sentiment for the shares. When retail investors hold only 10% of shares, the demand for the shares gets exaggerated and incentivizes insiders to sell as the share prices go up. For example, when there is some good news about new therapy getting promoted to phase 2, clinical trials, that'll be an exaggerated move in the share prices, because a lot of people who had other holdings and who are not looking at Beam suddenly come in to buy the shares, but there is only 10% shares remaining with the retail shareholders, and that's what is getting sold and traded. So the share prices go up, and that is a very good incentive for insiders to sell their holdings, and it's part of their remuneration. They may not believe anything bad is happening in the company, but it's just their compulsion that they have to do it. So that's one of the risks that you have to keep in mind. And institutions also sell periodically to balance their portfolio, especially when the share price firm up. Therefore, we can imagine the institutional ownership as a resistance level for the share price until the institutional ownership reduces to a more decent level. I remember I still hold the shares of Bank of Ireland. I had bought it at around 25 euros price, I believe, long time ago. And I had a significant investment in it. And then the share price fell to 25 cents. And that's when Prem Vatsa invested, I think Fairfax, they invested a huge chunk of money in Bank of Ireland. And once the share price came to around 50 cents or something, they sold the bulk of it, and then they moved away. And one of the rationale at that time was that it was becoming a bigger part of their entire portfolio, and they needed to balance the risk. They were there to take that profit, and then they moved away. But as soon as they moved, the share price fell immediately, and then it took a while for it to come back up again. So that can happen anytime when 75% of the shares are held by institutional investors. That's my point that I wanted to make. Also, Beam seems to have an average of 3% share dilution every year. Obviously, we might have employee share options and things like that. So that also kind of eats away at the share price value. If you look at the next chart that I have here, you will see that insiders have been selling shares all the way from 17th January to 30th March. You see big sales out here. There was a sale worth 326,000, then 29,000, then 1.2 million, and then 981,000, then 105,000, 370, 109. Given the fact that only 10% of the shares are actually with the retail investors, these are decent numbers for one quarter. So if you multiply this by 4, you can assume how much of insider sales are going to come in. In a way, it is a good thing because retail investors will now have a bigger share. So overall, it works out very well, and it can temper the volatility a little bit. So I think that's a good thing. But the fact that they are selling does not essentially mean that there is something wrong with Beam Therapeutics at this point of time. It's just that it's part of their remuneration, and they're taking their profits, and that's about it. Next, if we were to look at their current ratio, I'm going to show you the chart for their current ratio. It's very healthy. If you look at their current ratio, here I have the balance sheet from which I have taken out just the assets and liabilities. So I've taken the current assets for the quarters that we have here because they have still not published the end of year 2022 balance sheet. So I have current assets out here. I've just extrapolated the two rows, current assets and current liabilities, and put them down here, and I'm getting a current ratio which is diminishing slowly from 31st December 2021 when it was 5.96. It went on to 5.66 on 31st March 2022. It went on to 5.56 on 30th June 2022, and on 30th September 2022 it was at 4.64. So current ratio, I don't think it's unhealthy. It's pretty healthy at this point of time. But I am thinking that it's going to continue going down because I think this trend will continue because they are not likely to monetize any therapy in 2023 to the best of my knowledge based on my last review of the company and their pipeline. However, I believe that when their sickle cell disease therapy gets approved, it would be the best in class. As per Benzinga, in the last 3 months, 6 analysts have offered 12-month price targets for Beam Therapeutics. The company has an average price target of 66.83, and they have a high of 81 and a low of 53.00 in their expectations. Now let us take a quick look at their price chart in our TradingView platform before we end this video. Here we are in our TradingView platform, and I am in the chart for Beam Therapeutics. Each of these candles is a one-day candle, and you can see that we have encouraging results out here. The share is following this particular bull channel that we had drawn here, and its next objective is going to be 53.43, which is the red line of resistance out here. I'm going to just magnify this resistance because I believe you can't see these things clearly in a smaller device. So I'm going to just make this a bit thicker out here so that you can have a look at it. And I think that our MACD is looking pretty good, but only the momentum is a bit suspect because it's pointing downwards, even though it's above average. So we'll have to see what happens on Monday. It depends on the market sentiments. But as I explained to you, the dynamics of this share is that only 10% is with the retail investor, and that's what is getting bandied around. If any of the big players start moving, the price will be impacted accordingly. We'll get to know about it. So right now it's looking pretty good. And I don't have anything else to say about this share at this point of time because there is no new news. Let me check if there is any news out here. Last news was on January 9th. Their report about progress across base editing portfolio. That's all we have out here. So this share has been going up since the 30th of December. So in the new year, it has only been on one way, which is going up. And as the market becomes more and more risk on, I think we'll see better returns on the Beam shares. They're a healthy company overall, and also they have IPs and other things that they have developed. So it's a good company, but it's for the long haul. It's not for the short run as such. And I also think that given the fact that institutions hold almost 75% of the shares, we are definitely going to see some kind of institutional selling as the price of this share starts going up, because they would like to balance their portfolios as well, and they wouldn't like to have an oversized allocation to Beam. So they may also sell, and progressively over a period of 2 or 3 years, we will see that the retail shareholder will have more and more of those shares, and the volatility will also subside, and we'll have better valuation. So it's a long-term game for anyone who is holding Beam, or for that matter, any of these genomic companies, unless they are in the cusp of monetizing. I think CRISPR Therapeutics, in that regard, I'm very hopeful that they will monetize their sickle cell therapy this year, if everything goes well. And then it will be difficult to catch CRISPR Therapeutics stock. So that's my personal opinion. Of course, this is not financial advice. This is what I want to tell you. This is how I am thinking about it. Please put your comments below and let me know what your thoughts are about Beam Therapeutics, and whether you have it in your portfolio. Is it in the red, or have you made some profits? I'd be very keen to hear about that. Thanks and have a great day. Bye for now.